Welcome back, everyone. It is Thursday, May 9th. This is Not Your Advisor with NYU Grad. Let's jump right into today's session. It will be an abbreviated one because we keep having declining volume every day. But I'll talk about this in a second. So for the session, we had 683 new highs versus 121 new lows. Advancing, we had 70% versus 25% declining. 40% of stocks are below the 50-day moving average, and 32% of stocks are below the 200-day moving average. Looking across the board, we had a very powerful rally thanks to pressuring of 10-year yields. The Dow was up 331 points. The NASDAQ was up less, but up 43 points or 0.27%. The S&P was up 0.51% for the day. Looking at sectors, pretty much everything was green. Amazingly, there was one that was not green. Can you guess it? Technology was down 0.16% today. Can you believe that? With the Dow up so much. So how was the Dow up and leading versus the NASDAQ and the S&P? Well, you have in the Dow 30 some big names that are also in the NASDAQ and the S&P, like Amazon, like IBM, etc. But looking at the largest gainers of the Dow 30 today, you had Home Depot up 2.5%, Caterpillar up 2.11%, Goldman Sachs up almost 2%, and Amgen up 1.8%. So that is how the Dow was up so much. So let's keep going here. So I do want to preface and say that it will be a shorter podcast today. I jokingly mentioned yesterday, if we have less than 40 million shares traded on the SPY, there will be no podcast because there's nothing to report. We had, let me see. I want to look at specifically where we ended on the SPY. But it was really light trading, even until like 3 o'clock in the afternoon. Oh my gosh, look at that. We closed at 40 million shares traded, just enough to have a podcast. And the average volume is typically 70 million shares traded per day. With the shortened podcast today, I did want to give a quick shout out to Adam Taggart and Melody Wright. They have a great episode of Thoughtful Money that's out today. They talk about real estate, but they go really deep dive into the pandemic, where a lot of the mortgages had forbearances and the impacts of that. It was basically a virtual home equity loan for those that were struggling. But it goes into a deep dive on real estate / housing, a little bit of commercial real estate, and how this is potentially going to become the Big Short 2.0. With the time I give back today, please listen to this. You'll have the YouTube video embedded in the show notes, or you can listen to it just via their podcast, Thoughtful Money. I'll link both, the YouTube video as well as the podcast that you can just literally play in the browser. But please watch that. You'll learn a lot. Comment, leave me a comment on what your thoughts were, or if you have questions, I can try to get in touch with Melody or Adam to answer your questions. But let's keep going. I did want to have some discussion here on the low volume. So we've had multiple days where, and I've been posting on Substack notes, like, oh my God, we only have 12 million shares traded on the SPY at noon. Oh my God, we only have 37 million shares traded for the day. So I'm not saying this is bearish or bullish. It's going to go either way. Volume has vanished. So I hope I never have to witness a tsunami in person, in real life, but every tsunami, one of those key ingredients of warning sign is that the shoreline will go out to the sea. So if you're standing on the beach, the ocean just disappears, right? They call that the drawback. And that's what this basically is. I'll post a video on the show notes where you can literally see an animation of what this would potentially look like. The beach just completely vanishing, the water, and you're just left with sand. And that's what's happening to the stock market right now. There's just no volume anywhere. So what's going to happen is when volume comes back in full force, it's either going to be heavy buyers or heavy sellers. Now, I know the markets were up quite a bit today, but it was on no volume, so it doesn't mean as much. Price, at the end of the day, pays and it means the most, but you have to start looking for clues like this. There's no volume. We're trading half the average volume for multiple sessions. This is volume that is akin to like the Thanksgiving week break when no one is around traveling the country or the world. That's the type of volume we are seeing right now. A huge day for gold and silver and the miners. Take a look at two Substack pieces that I will also link right below the tsunami diagram. The first one is Gold, the Last Dancer on the Floor, Q&A with Bill Cara. Bill Cara has been saying for years that once the blow-off top happens, gold and the miners will typically, he suspects, be the last dancer on the dance floor before we start to sell off. In addition to that post, I'm also sharing the post called Fed Pivot Will Be a Head Fake. This is from November of 2022. I posted this. In history, every time that the Fed cuts rates, they cut too late, and after they cut, the stock market and asset prices fall. That's correct. So a Fed pivot, when they finally cut, after they've been saying they're going to cut for over almost 2 years, it will be too late. And we might see a spike higher when they announce those those rate cuts, but in the long term, from the start date of the Fed cut announcement to the next 24 months, you're going to see lower prices. Historically, that's how it happened. Maybe this time is different, but read that post as well. Free members, like I said, just check out this video, the interview of Melody Wright with Adam Taggart. And premium members, please stay on just for a few moments. And before everyone leaves, another way I found that some of my paid subscribers are not getting access to the paid content, you may have multiple emails and you've subscribed to my Substack with multiple emails. So you might be logged into your Substack with the free subscription. So you're not getting the full content. So what you want to do is log out of Substack, sign out, and log back in with the email that you paid to upgrade. If you're having trouble with this, I help someone go through it today. Just message me or email me, and I'll try to help you figure it out. But simply put, log out of Substack, log back in with the email address that you paid for the upgrade. With that, I will see all the free members after the Friday session. Premium members, please stay on for a moment.